Hello, everybody. I'm Fritz from Firefly. There's TJ. He's from our personal lines department. Today, we're going to talk about being more competitive, just some things you can do within the carriers that you've got. One of the realizations TJ and I had as we were preparing this content is that it's very possible, and we see it, in fact, that we can have two Firefly agents in the same state and maybe even not terribly far from each other, and one is really struggling and saying, I just can't be competitive. And another one is hitting it out of the park. And they're both quoting, but they're doing some things differently. And so what we've seen, and credit to TJ, he's identified some of these patterns along with Lorraine, but has said, yep, we see certain, I guess we'll say mistakes that we see agents falling into that keep you from being as competitive as you can be. And we wanted to help by sharing those with you. And whether this helps you, or if you have a staff person in your office that you might want to share it with, we hope you'll do that. Last thing I wanted to say is that for me, when I got into the business, actually even before I did, when I was in high school, I would sometimes work at my dad's office part-time after school. And he was a mentor to me. He was someone who he taught me almost everything that I know about insurance. And it wasn't just what coverages were and stuff, but he'd tell me, this is how you need to think about this coverage or this discount. These are ways to talk about it. Here's what you can say or ask of a customer. And I don't think I thought about it until fairly recently, what a big deal that was and what a big difference it made to me. He had a mentor. His name was Howard Nisley. We realized that some of our agents never had a person like that. You came aboard and a producer in an office or maybe in a captive scenario, and they basically gave you a handbook and said, here it is, get going. So we hope that some of these things today that we share can be a little like that, things that you can take away and say, that's give me a different way to think, or something else I can say, or something I can do just to grow your agency faster. But anyway, with that introduction, let's go ahead and get started. TJ, over to you.
All right. So something I want to point out is kind of like the big picture view, like what will be like kind of the takeaway be or the goal. So the goal is to create an awareness of how important it is to sell a complete solution and what creating those habits can do for your agency. The presentation will give you the best practices needed to sell more profitably and retain that business for a more successful agency. So first thing you want to be clear about up front is there's two types of selling. There's one that's more comfortable, obviously, and that's one when somebody comes in and they know exactly what they're getting and they pick it up and they pay for it. You're selling them something, right? So, but what we really want to do for ourselves is persuade a client of the merits of what we're selling and why it benefits them or why it solves a problem for them beyond their initial request. So we definitely want to kind of show the client what we can do to solve those issues. Now, as a modern agent, like we kind of see it that you need to be more than an order taker. Computers can take orders, but modern agents can separate themselves with a customized experience for the client. Um, so you definitely need to be kind of like an expert in more ways than one, not just insurance, but also how to identify what you can do for those clients.
And can I just add on that one, TJ, too, that one of the things TJ and I have talked about is, like we talk about a modern agent is easy to find, easy to buy from, and easy to work with. One thing that makes it easy to buy from is if you can help customers to understand, in some cases, why coverage is important, or why a particular discount is worth them doing, like say if we're talking about telematics, or just even understand why. Most people don't know anything about insurance. On a scale of 1 to 10, they're like a 1 or a 2, right? And your ability to help them understand what they have, at least this is my experience with my dad. As a farmer's agent, we had one carrier. We could not sell on price. We had to help people understand, here's why you need more liability coverage than you have. And once they understood it, they're like, oh my gosh, 100, 300 really isn't even that much, these days, and that kind of a thing. So to TJ's point, the idea is, modern agent does have to be more of an order taker. Some AI is going to, take your job someday. So anyway, back over to you, TJ.
Now, this is kind of a philosophy that I have had an understanding of, like in my 12 years sales experience. And I've sold everything from home theater systems to cell phones to insurance, which probably is like it all translates. It's just you got to find the way to do it, obviously. But the act of selling something is significantly more challenging and risky than taking an order. And what I mean by that is that when a client is placing an order for a good and service, there's very little risk involved because the individual has already agreed to what they're going to buy. The true challenge is in a salesperson, and it occurs when the buyer has not yet agreed to what they're trying to purchase, and that is your solution. Um, so when the buyer's placing an order, just to summarize, the seller feels in control. When the seller, you, is trying to sell something different than the buyer ordered, the seller feels the buyer's in control. And what I want to kind of like convey on this slide is don't let either feeling dictate what your end result will be. Let the end result be your solution at all costs, because you are always going to be doing what's best for that customer. And it's just finding ways to get there, which we'll discuss later.
Hmm.
Now, what should your priorities be as the seller? Your priorities should be bundle business at and all relevant products, umbrella, motorcycle, whatever they have. You're definitely going to want to bundle that stuff and sell as many products per client as possible. And you want to have the correct coverages for the carrier's appetite. Obviously, 100, 300 is kind of what our preferred carriers are buying. And if you want to do the umbrella, you want to do that 250, 500. A lot of times discounts compensate for the increase and things like that. But being aware of what that movement looks like and how you can utilize it to benefit your client. And then, of course, all applicable discounts, which we'll dial into a little bit more later.
Yeah, I really like
Um,
that part. Yeah.
yeah. Now, the customer typically does not know what's best for them, and this can lead, and you can lead them to a better solution for problems if problems they don't know exist. Um, Now, bundling the business under one roof is easier for them, one place to pay, or if you're doing EFT and getting that discount. It's easier for them, easy, and it retains better. It'll stick with you for longer. More discounts saves them money, builds value, more coverage, ease of mind or peace of mind. And another thing, and a lot of people miss out on, like, you're their agent now. Letting them know that, letting them know you care, letting them know that you're going to be there for them in a claim situation or a service situation. These are priorities you should have for every client, and it is recommended that you mention it multiple times in the instance that they say no. Selling this way will lead to providing a complete solution to your client, creating profitability, policy retention, referrals, credibility, and best of all, more money in your pocket.
Yep. And all I'll say on this one is what we're gonna talk for the rest of this here is some things. She just got some great specifics, numerical examples about bundling, putting the home and the auto together, at the very least, some things about coverages, and then especially the discounts and some things we don't see agents doing with discounts that they can be. So there's kind of your framework for where we're going from here.
Um, Now, the first thing that I have seen so frequently is like, don't let the numbers scare your client, or you for that matter. Compare the package and not the product to product. Do not miss out on bundling or pivoting, by pivoting to product because the product is more expensive. I always hear like, oh, I couldn't sell that because the auto went up. That's always what auto went up, the auto went up, or the home went up. A simple side by side package comparison can show it is better, even if the home and auto is more than the previous policy. Now, the example here below, let's say the prior rate, these are all hypothetical, $1,000 auto, $1,500 home, and then $2,500 for the package. Obviously, the new rate number one would be ideal. If you can get them both to go down, obviously that's good. $2,300 savings, you save 200 bucks. Now, here's the thing on new rate number two, and this auto may be deeper into your comparative rater rates. It might not be number one. So you really have to assess your rates and not just go number one, and call it a day. Because in that instance, the auto went up 100 bucks, and a home though dropped $400. So that creates a package of $2,200. That's $300 savings. There's a very, very important disclaimer here that I believe my way philosophy is never pivot unless eligibility pushes you that direction. Maybe whatever it is, maybe it's roof condition or something like that. I
Hmm.
feel like that's the only time you should pivot. And then I will, later on, discuss some, next week, also talk about some techniques to quote in a way that kind of like caters to that philosophy.
Yeah, well, can I just add a couple things here too, TJ? Like as we're looking at this, we bring this up, and this might seem like, that seems pretty basic for some of you, but we bring this up because we see it in agents who come on board and say, I can't sell like rate two because the auto rate is too high. And of course, if you're feeling that way, you're not going to present that to your customer, even though you could have saved them more and actually probably increased your chance of getting that sale. Again, as a farmer's agent, I only had one carrier. This was me all the time when one line of business was more and the other was less. And what I would want to say to people, I point it out, right? And say, look, I'm going to save you $300. You'll note that the auto is higher. And you might even say, well, why don't I just take the home and I'll do the auto somewhere else? And the reason is because your home rate's going to go way up. This carrier is competitive here because it's packaged. The flip side of that, and some of you guys have been agents for a while, I remember occasionally getting a call from someone and say, hey, my home rate went up. Why? Well, I see you canceled your auto here a couple weeks ago. You had a 40% home auto discount. Oh, I didn't know that. The other agent didn't tell me my rate was going to go up on the home. It's like, well, why would they, right? They're just trying to get that sale. In some cases, I was able to get those people back. And so I guess what I also wanted to add on this is we sometimes will have agents as they're talking to, TJ or Lorraine or any of us here at Firefly that'll say, well, my customer only called in and they only wanted a home quote, or they only wanted an auto quote. And so I don't want to ask them for the package because I don't want to be a pushy salesperson or whatever. And I guess what you need to the way we hope you'll think is to recognize the truth is you're not going to be able to be the most competitive unless you're actually bundling. You're really you're giving not your best offer to that customer. And related to that too, let's say you even do get one line of business. You have just brought over to yourself a customer who is not likely to be with you for very long. So I would say, what's the bigger risk? Saying to somebody, hey, you know what, you want me to be able to give you the best rate on your home insurance, right? Yeah, I do. Okay, well, to do that, there's massive discounts by combining the home and the auto. So let's quote those together. Let's start gathering some information, and you just go for it, right? And most people they'll get it. They've seen the commercials with Flow and stuff, right? They know everybody's talking about bundling. But to me, is there a risk that someone will say, well, I only want the other one? I suppose, but the risk of what, right? I think they're not going to get angry. Worst case, you ask them a few times, and they're not going to necessarily go for it. But a lot of people will say, okay, sure, let's see what it is. And to me, the risk of having a book of business that's based on monoline policies is bigger than the risk of just asking somebody for that up front, which you deserve, by the way. The time it takes for you to do these quotes and stuff, you should be asking for that package. So anyway, those are just a couple things that we've talked about that too. Anything else you add on that one, TJ,
Yeah,
before we
well,
move on?
I know back when I worked at Best Buy and I was selling home theater systems, it was a great training ground for sales because I had no commissions to worry about. It was just like, how do I move these products? And one of the things that I learned was it was back in like the Amazon boom, really. And it was Best Buy, the big box stores was a showroom, a glorified showroom. And people would come in and see their TVs and they'd go buy it online. Well, it almost inevitably, I loved walking around and seeing people looking at a 3 or 4 or $5,000 TV because they felt like they needed that. Well, one of the things that I had was a sales sheet, and what reason why it ties into this was I know a lot of insurance agents will send out the quote sheet, the quote proposal, and let the client figure it out. What I always did was I wanted to identify the savings and value I could provide for that client. So a lot of times, and I always had, it was all in that. Obviously, it's the experience. So I had a TV that my go-to TV. It was always on sale for $700. It was a Sharp Aquos, very nice TV, four HDMI inputs. It had all the bells and whistles, but the screen was made in the same factory as that Samsung that they were looking at, but it had motion controls and everything else. I had that TV hooked to an HK soundbar. I'd be like, can I show you something? I'd be like, oh yeah, sure. I'd take them over to Sharp. It was always the Batman, the Dark Knight. That was my go-to video. Show them the picture. It would be playing on the HK soundbar. They'd be like, what is that? And I'd show them that. Next thing I know, I'm getting them into a Sharp $700 TV. I'm writing this on my sales sheet. Um, Sharp $700 TV, $500 soundbar. Oh, here's the cables you need for that soundbar. Don't forget a Blu-ray player if you want to take advantage of that picture. And I'm starting to build this solution, and I haven't even touched their $3,000 price point that they were willing to accept. I already knew they were willing to pay $3,000. Next thing you know, I've got the 4-year Geek Squad on the soundbar, 4-year Geek Squad protection on the TV, and they haven't even spent even close to what they were going to spend. Now, the secret to that, and it sold every time, was the sales sheet. How does that translate to insurance? Identify your savings and your solution to the client. Don't send them a quote proposal and let them figure it out themselves. Identify what you are doing for them and show it to them, whether that's a pre-canned email, maybe it's a chart like this one. Let them see. Maybe it has, oh, by the way, these are coverages that I feel like you probably should have and are important that you didn't have previously. Show, like, identify the value and savings for them. And this is one, like, a great way to do it.
Yeah, I think they totally are. And if you have a circumstance like TJ illustrates here, where one line of business is more, you don't hide it, right? You say, hey, you'll notice this, but here's why this still makes sense for you to do. And my dad always says that sales, and he heard this from someone else, sales is a transfer of feeling. If you have confidence that this is the best way for you to go. And by the way, you might say, and you might wonder, what if I just took the home instead of the auto? And you say, if we did that, the home would go up, by this amount. You just cover those things, and people say, oh, okay, all right, I just wanted to know. So anyway, I think we see that as an opportunity where a lot of agents can improve. So whether it's you or you have people in your office, you should always be asking more than once, even for that other line of business. And we'll cover a couple things related to that here as we go a
I
little
think it's
further on.
important to point out, all of my co-salesmen there used to laugh. They're like, TJ, you never sell big ticket TVs. I was like, well, you never make this company money because all of the margin was in the accessories and the Blu-ray players and the speakers and stuff like that. There was
Yeah.
literally like maybe $15 margin on all the TVs. So
Well, and
I
on
was,
top of
I
that,
was
the
stoked.
customer walked out. They walked out with a great experience, right? They've got
Yeah.
they've got a great experience as opposed to big TV with tinny little sound or
Well, the
whatever.
referrals that came off of that and things like that, just people like, man, this guy TJ at Best Buy, and people would come in and be like, oh, you helped my friend the other day, he got X, Y, and Z. It literally just builds on itself, and the word spreads. Like, people will talk about it. If you provide an experience, and you can do that in insurance. I understand insurance is a little more boring, but if you think about it, what you exchange for, like, fun and like, this is the experience you can have, the stakes are higher in insurance. Like, imagine what you won't have to deal with. You know what I mean? If this claim happens or whatever it may be. So
Yep,
definitely need to
that's
be
a
clear on
really,
this.
really, really great point there. The stakes are much higher than a television. And I think if people can understand why they bought what they bought, why they got the package, why they increase, hey, look, I can save you money here and I'm increasing your liability coverage and so forth, they can just feel like that was really great, as opposed to just, I wanted a home quote, yours was $40 cheaper and that's it. Which customer is going to stick around the longest? So, all right, back over to you, TJ here.
So this is the discount page. So like, the big thing for me is save money through discounts and not coverage cuts. I can't tell you how many times I've been helping an agent and it's not quite where they want it to be, and they start like chipping away at coverages. $25,000 med pay is $5,000, and the liability is 100,000 instead of 300,000. And it's just, with all of the opportunity for savings, it is not the right way to go, I would say, especially if you're trying to sell profitably. Um, and as I mentioned here, so oftentimes as a desperation move, I will see agents cut those coverages to save the client money. Um, so that now there's so many discounts out there, and what I want to separate here is there are discounts that have requirements and some that don't. Obviously, if multi-car, you have to have multiple cars. Good driver. If somebody's a good driver, they get a good driver discount. They're not always a good driver. However, on the left side here, they are discounts that I find to be the most important and possibly the biggest ones. The first one I quote with every time. Obviously, if somebody has an expiration date tomorrow, you cannot utilize this. But if they're a month, 2 months, or 3 months out, and you have some wiggle room, I would quote 2 weeks plus out every single time. So advanced quote discount for sure. Multi-policy and package, huge savings there. If you're just selling monoline, you're leaving so much money on the table. It is really going to hurt your ability to identify the savings and value without doing multi lines of business. Telematics, this one is such a huge opportunity now, and it's only going to get bigger. I always tell my agents, if you're not doing it, the guy down the street is. It's not tracking, it's not this. We live in a world where we're assigned a number at birth. They know where we're at.
Mm-hmm.
So as far as telematics is concerned, example, I've worked with an agent once, more than once, just added their daughter. It was the agent's policy. It shot up like $1,800 or something like that, which they knew it was going to go up high. They didn't know it was going to go up that high. They were not a fan of um, telematics or whatever. Like, let's just try it. Let's just see if we can soften the blow. And with the like $100 here, $110 there per driver, it didn't lower their rate. It didn't lower that driver's rate specifically, but the overall, the big picture, it dropped significantly. Um, all of a sudden, they felt a lot better about telematics. Some of these
They could
telematics
see what was in
things,
it for them, right?
right, yes, they're trying to collect data, but they're just trying to stay rate adequate so they can cover the client's claims in the future, so like that. They're not trying to know exactly where they're at. They're not Big Brother. It's a smart way to go about it. It's really the new multi-policy discount, and if you're not trying to attach it to every policy, you're not going to be competitive. You are going to fall short. And then obviously auto pay, paperless, and pay in full are other ones that people don't have to have any outlying qualification. If they're willing to do it and willing to save money, it's something that you can apply to the policy.
Hmm.
That being said, I want to kind of shed some light on some of these are, I would say, conservative numbers, but they're numbers that I have seen in savings on some of these discounts. Advanced quote, $200, multi-policy package, up to, and maybe even more than $600. Telematics, three. I saw the other one the other day is $423. And that was, by the way, that money was left on the table. And I was like, I don't know why you're not saving that money, but auto pay, $100. It could be in the ballpark of that. Paperless 75, pay in full $400. This is all money that you could chisel away without even touching coverages at the end of the day, which is a huge win if you're willing to utilize the discounts and utilize the tools at your disposal.
Well, and so a couple things that I'll just add on that, because this to me is one of my favorite concepts that TJ had for today, and that is that there are some discounts that everybody can at least qualify for. Now, maybe some people can't afford to pay in full, right? Probably these days, a lot of folks can't. But auto pay and telematics and multi-policy and advanced quote, they're there if you just plan ahead enough and use them. And if you pile these things on top of each other, this is where, can you see what we're saying at the beginning? You could have two Firefly agents with the same carrier in the same state, or you and the agent down the street. And if they're including this stuff and you're not, then of course you're not going to be competitive, right? The carriers are giving you tools to do it. And in fact, I'll speak to telematics. I was at a meeting with some travelers executives a couple of weeks ago, and one of the things they were saying is we are looking so hard. We love agents and agencies who use telematics, because we find those drivers are better drivers, the ones who will do it. We have better information on what's actually out there, and it's only going to happen more and more. So a funny thing about telematics is start preparing your customers to understand you don't have to do telematics, but soon, and in fact, it might already be now, insurance carriers are going to say, you know who chooses not to do telematics? Bad drivers. So if you choose not to do telematics, the base rate is, it is by definition now higher, right? It is. So you are choosing to be in a basket of people that the carrier is saying are likely to have more accidents. So it's the kind of thing that if you can put this stuff together, like TJ said, you can reduce the rate. You don't have to reduce coverage at all. In fact, if you're leading with liability and helping somebody to see, you've got 100, 300, but you own a house, you got a retirement plan and stuff, you need $500,000 or maybe an umbrella. You put this stuff on here, you still may be able to come in close to what they're already paying. So one thing I would invite you to do, having been an agent myself, is when I was an agent, I would say there are certain coverages I'm always going to quote. What I hadn't thought is what TJ is talking about here. Maybe you within your office say, folks, we're all going to use these discounts all the time, or at least offer them. And if somebody says, I don't want to do auto pay, yeah, okay, that's fine, but you're at least able to go in with the best rate that you've got. And a lot of folks, like TJ was saying, when they see the telematics discounts, they're like, oh, I can save how much? Oh, and I only have to do the driving thing, the app, for like 90 days or whatever. I've changed my mind on telematics, and they will come around. It is so much more normalized to think. So one of my invitations to you is, why not for your agency for like at least a month, give it a month, uh, try always including these discounts on every quote that you're on, and see if you don't find it like, hey, wow, if I am a lot more competitive and I'm getting more people saying yes and closing some more of those sales.
So this is save money through discounts, not coverage cuts continued. So this is a quote I did. This is live in Easy Links, numbers that I've collected. There's some things that I want to point out on these savings right here, by the way. So the chart below breaks down three of our most popular carriers, um, what it looks like to sell monoline versus bundle with the advanced quote discount. That's it. Something I want to point out is that in Easy Links, that's an Easy Links quote and does not include reports. And the reconstruction costs and protection class are an estimate. That's something we'll touch on next week and go into more detail. I always estimate high. I want that rate to come to me. I want to be in control. I don't want to get to the carrier and have a surprise. So I always estimate high. As a matter of fact, I think this was $100,000 high on the RCE or the coverage A. Sorry. Um, and another thing to point out is that these quotes do not include the other opportunities like telematics, good driver, auto pay, pay in full, etc. This is just those two discounts: advanced quote and bundle. So as you'll see, Hanover Progressive Travelers, the red numbers under auto and home are the monoline numbers. Um, in carriers look at multi-policy differently. You'll see, obviously, sometimes they take more off the auto, sometimes they take more off the home. It's just how they view that. But what you're going to see here is with the advanced quote discount and the multi-policy, you're looking at $600+ $900 in travelers case savings every single time. And that's before I fine tune my RCE and get that number to come back. That's before my protection class goes down because I assume protection class 4 or 5. And that is before I add things like telematics. So, with that in mind, it is so important to try and carve out that complete solution for that client because the value in savings is going to build itself into that quoting. And it's going to be much easier for you to identify that for them. And it's going to be harder and harder for them to say no.
Yeah, because it's so good for them, right? Not that we have to be amazing salespeople or persuade them to do something that's not in their best interest. It's because they're going to look at that and say, "Holy cow, that is better." And what was amazing to me when TJ showed me this sheet is that these savings here, which are at the right, and you have to add those two together for the total savings, right? The ones for the auto and the others for the home. These just the advanced quote and the bundling. It really, 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 really matters so much. And by the way, carriers right now, they want bundled business. Loss ratios are high, with carriers across the country, and they're looking for and love agents who are bundling. And which, by the way, is another thing. You write them online policy. Who's going to get the biggest rate increases next time around? Ones without those multi-policy discounts and so forth. So this is just an instance where it kind of reminds you of when that person calls in, hey, I'm a realtor referral or a lender, and I just want a home quote, or the other way around. They just want an auto quote, to be able to say, hey, look, you want me to give you your best, you want the best rate I can get for you, right? Got all these carriers. You want the best rate? Yep. Okay. Well, to do that, we're going to need to quote the home and the auto together. It'll only take a couple minutes more, and it seriously could save you, $500 to $800, and then just start right into it. And most people will be like, okay, and they'll go for it. I think TJ, is this where you're going to share another kind of past
Yeah.
sales experience? I think.
Yeah,
Yeah.
well, I've been trying to keep my stories like diverse, so we'll hop to cell phones because it's all translated. Like the home theaters and cell phones really kind of shaped what I did in selling insurance because it all translates. So when I worked at T-Mobile, um, first off, I was already kind of like one hand tied behind my back because I was in Newark. Newark, Ohio did not have 4G. They did not have 4G internet. However, they still had internet and could still get unlimited. So I had a coworker. He was all about the box. A box is a new line. And he used to smoke me on boxes. I'm not going to lie. He sold a ton of boxes, but he used to get so mad because I would make so much more money than him, like money in my pocket, commissions. He's like, dude, how are you doing this? And I always spent a little extra time on the client. I got the box. That's the first step. I with bundling, they didn't just get the line like on his clients. They got the insurance on the phone. They got the data because it's unlimited and they can use the data in places like Columbus where it's at. I made that clear to them. Like it's not here, but if you go to Columbus, you're going to want that 4G data if you're on your GPS or whatever, because there's nothing more infuriating than being lost and your GPS is not working. So what that did for me, and what this translates to insurance perfectly, because when you bundle, guess what? You get the higher commission, which you guys all know. for me, it got me the kickers. It got me the accessories kicker. Everybody left with a screen protector and a case. Everybody left with that insurance and the data. And I hit the data kicker. I hit the insurance kicker. I hit the accessory kicker. That made me make more money because of the kickers and the additional percentage on commission. Now, the beautiful thing about that is delivering that complete solution, just like at Best Buy. I got referrals. They were coming to me for their upgrades, which secrets out. They didn't count that as a box. So technically, I did sell more boxes than him, but an upgrade's not a new line.
Yeah.
But with those referrals, it just pads the stats. It makes life easier. It truly is selling competitively. And the root of it all is bundling, and I cannot stress that enough because it is really kind of what helped me successfully like climb the ladder and get the insurance. And now we're on this webinar, and I'm trying to convey to you guys what I feel like helped me my with my mentors, whether it was Herb at Best Buy or Trenton at Nationwide or Adam at T-Mobile. I'm trying to convey those messages to you guys
Mhm.
in hopes to help you.
Well, and can I take what you've just said, TJ, and maybe even more directly relate it to insurance? One thing TJ has shared with me in the past is that one of the things he'd do about it, the screen protector is, TJ, I won't do it quite the way he did, but like you'd ask him about that. You ever had one? And anybody, you'd like throw the phone on the ground, right?
Yeah, yeah. I was all about the experience in
But
those
maybe it was about
times,
the
and
case and stuff too. Yeah.
I was like, what was one of the things I said? Have you? I was like, have you ever stubbed your toe? And be like, yes. And I'll be like, did you mean to? Because they always told me, oh, I never dropped my phone. I'd be like, check this out. And I would just chuck the phone into the air because it had this shock proof case on it. I'd pick it up and like, oh, still works. And every single time, first off, they'd laugh at my joke about stubbing the toe because nobody does it on purpose and accidents happen. But seeing me actually chuck the phone as hard as I chucked that phone, they'd be like, okay, I want
They
that case on
they were
there
sold by
because
seeing it, right?
yeah, they
Yeah.
don't want to pay the deductible, so it saves them a ton of money to buy the $30 case. So.
Well, and so here's the thing for agents and insurance. Obviously, we can't like there's nothing to throw. But what I learned from my dad and what he learned from Howard is that they have experiences to share, right? Stories, brief illustrations of how the coverage would work. So, for example, gosh, one instance my dad had, he would very almost always sell uninsured motorist on umbrella policies, not just the basic auto policy, but umbrella. Real life story. He said we had a client riding down River Road, beautiful road, not far from where I'm here. A lot of cyclists out there, but it's 55-mile-an-hour speed limit. So there are these three guys, all doctors, who were out there one day riding along on their bikes. It's like mid-afternoon. A driver who'd been drinking hits them, kills the one guy, seriously injures our customer, has state minimum limits, 25,000. Now you got this doctor who can't work again, who had $1 million of uninsured motorist coverage on his umbrella, and how valuable was it, to that guy at that moment? I mean, that's an example of uninsured motorist coverage where people go, oh, never really thought about that, before. That would help. So again, not quite something you can throw on the ground, but there are ways that you can show people how the coverages that you're recommending are helpful. And by the way, how the discounts, it would be great if you can get that and you can add that coverage and not even pay more if we just go along with these discounts that we were talking about here.
Well, finding those clever ways, Fritz, that's a good point. Because so when I transferred from Newark, a 2G market, I thought I was like, oh my gosh, I want to kill it because I got transferred to Columbus, 4G market. I was like, this is going to be so easy because I'm actually selling something that works where they live. The problem is where I got transferred was kind of rough area, to say the least. Like I remember showing up to work and the Great Clips got robbed, so it was a rough area. Now, what did that do? Yes, I had 4G data to sell, but the problem is now I moved to a spot with low credit consumers. Finding your way to make it those work for you. Maybe you're marketing, maybe you get a lot of non-standard clients. That's okay. We have places to place that. For me, my what I had to do was I found out we had this no credit check. Because if you'd run their credit, it was low. They had a $400 per line deposit. But if you did the no credit check, there was no deposit, and they could pay outright for the phone. So I would get them this LG $125 phone, however many lines they needed, one or two. They would buy the phone for 125 bucks instead of 800 per line plus the phone. And they would be able to walk out with a phone, a SIM card. I had new lines. They got accessories because I didn't let them leave without it. And I made that work. I think that is something that translate to wherever you guys are at. Maybe you have high credit customers, they're competitive all the time, which is fine. Maybe you are a lot of non-standard. You can still package with non-standard. Of course, you're going to have to pivot on your auto if they have the DUI or something, but maybe they have a beautiful home. They're not mutually exclusive.
Hmm.
There's the hippos, the guards, the openlies out there where you can place that nice home risk, but still ensure their autos. Just be change resilient, be like learn how to pivot and how to understand the clientele or whatever's coming through your door, and we'll be able to do this almost every time.
Yeah. Well, and just coming back to this too, in addition to this bundling and so forth being good for your customers, remember, TJ made a good point. Let's not miss it. We have a number of carriers who will pay more for bundled business than for online business. That is, say, pay you more. So your customer saves money, you actually make more money, which, by the way, just shows how significant that is to the carriers. You know, that in many cases they're willing to pay that extra commission for it. It's because they're more profitable on it, which, you know, improves your loss ratios, helps the carriers to love you. There's just a lot to like about bundling. So anyway, thank you for that, TJ. I think we got just one slide left, right?
This slide is basically just some things that I've utilized in my sales career. There are hundreds out there. You do not have to use mine. Um, the first one is A.R.M statement. Basically, it stands for acknowledge, respond, and move forward. Somebody comes in, I only want auto. Instantly, oh, well, why is that? Hear their objection, acknowledge it, be like, hey, I understand. I support your stance there, but then respond with why it's the best thing for them. Let them know, and then move forward. You've acknowledged it, move forward. And you can repeat that because there's probably going to be multiple objections. You know what I mean? Maybe you bumped up their liability because your bottom line at a preferred carrier is 100, 300. You know what that means to the client. Their previous agent didn't. They're like, wait, wait, wait. Why'd you do that? Okay. I acknowledge your
Mhm.
objection. This is why I did that. Move forward. So the ARM statement is something that's scalable and it translate, and you can do it all the way throughout the conversation. They don't know you're doing it. Have some pre-built ones and practice them. The more you do it, the more comfortable it'll become.
And can I just throw out, again, a real simple example? And maybe we've already kind of done it before. If you have someone who's calling in, they want an auto quote, and you say, well, you know, to get the best rate, we're gonna need to quote the home as well. And they say, oh, I don't have time for that. I just want the auto quote. You could say, oh, okay. So what I hear you saying is you don't have a whole lot of time, and you're afraid that getting the home quote will take a bunch of time. I hear you. The good news is I can get a lot of the information I need for the home quote off of, you know, public records and stuff. Just ask you only a couple questions. Seriously, it'll only add a couple minutes to our process, and I might be able to save you hundreds of dollars more when you put it together. How about we try it? You know, so again, you're acknowledging, acknowledge that you hear them. You're telling them, here's why this is worth trying to address that concern, whatever it is, and then, you know, ask again. And again, because if you feel strongly about it, people will say, okay, all right, you know, and they won't always, but at least you give yourself a real shot at it.
The second thing you guys have probably run into this on the like daily probably is just stubborn customers. One thing that I would urge you to do and just sprinkle it throughout or pepper it throughout is just ask multiple times. They're probably going to say no. They're like, oh, I don't want to goof up my escrow. Oh, I don't want to do this because X, Y, and Z. I don't want to deal with moving both because that's too hard. You don't have to get the yes immediately. You really don't. And honestly, like Fred said, you don't need a ton of information for the home. A lot of times they're coming in with auto. Um, we can get home quotes relatively quickly too, if you're working an easy link. So even if they're saying no, you could still be doing it. Because guess what? At the end of the day, they're going to need to see what you can do for them. They're not going to assume that you're going to solve these problems for them.
And just I could add too. Let's say they do bring up a concern that you hadn't thought of before, like the escrow account. I'm afraid to mess it up. Oh, okay, so you're saying you would be open to a quote, but you just don't want to mess up the escrow. What if it saved you $500 a year? Would that be worth, you know, making that update at the escrow account? Yeah, actually, it would be worth the $500 for that, right? So you're not just saying you're foolish. Why aren't you letting me do this? But you're listening to them and asking, you know, able to address it. So it's a good pattern that TJ was talking about there.
Now, another option, which I got real comfortable with after a while, is just the direct and honest. So, and it might be a more risky strategy. There's like, I'm not being like light on that subject, but it does work. Is like, let the client know that without the ability for you to bundle, they would be forcing you to cut corners, which would not allow you to give them the best possible solution. So I've seen people say like, I'm just not willing to do that to you. And putting that out there, being brave enough to put that out there, a lot of times it speaks volumes to that client that like, wow, maybe this guy is more about like caring about me and less about making money because he's willing to let me walk completely. um, you got people who are going to take the wrong way and be like, well, you don't want my business, I'll go elsewhere. It's going to happen. But you know what, you're going to have a lot of no's anyways. That's sales. It's just, what do they say, 10 out of 100 you're going to get yeses. It's the grind. But some of these tools can help you get there. And the direct and honest piece, again, it takes practice to become comfortable with it, but it is one of my favorite ways.
Mm-hmm.
And then lastly, we kind of mentioned it a little bit, quoting in the background. Just quote it, then propose it. You know what I mean? You don't need a ton of info to get a home quote. A lot of the info you can get off Zillow. Um, as long as you in Easy Links estimate a little high on your RCE, it'll come back to you, and you can just quote that in Easy Links and propose. Let them know the auto, and you can show them both. Like once you get there, be like, hey, here's your auto, here's your home. This is what it would. You don't want to propose your Easy Links, by the way. You want to fine tune it first. But like when you propose it, if they're like, wait a minute, what do you mean home? I don't want that. Okay, remove off that multi-policy discount. Your auto is actually going to be, and it'll probably jump up 400 or whatever dollars. And they're like, oh, what kind of magic is that? Like, it's the bundle. Trust me, it's the way
It's a
to
big
go.
discount. Yeah.
They're going to see that money. You're going to naturally present that savings to them that way as well, because you're going to take that off and it's going to shoot up, and it's probably not going to save anything.
And the idea there, I think, especially if someone's called you for auto and hasn't said they want the home quote, it's not that difficult to run a home quote, like TJ said, just off public information. You're having to make some guesses. You have to say, look, this isn't going to be a particularly accurate quote, but do you see what a difference it makes? So, anyway, I guess just to kind of wrap things up and kind of hope that you help you to see. Hopefully, you caught the main points. It's absolutely possible there can be two agents, whether they're Firefly agents or just somebody down the street, with the same carriers that are coming up with totally different rates for the same prospect. And what we hope from today, that you'll pick up a couple things. One, your time is worth it as long as you're doing somebody's quote to quote the bundle, right? Ask for that. And it's also worth it to put those discounts on and give them the best rate that you can possibly have. Don't hold back those discounts from them. You're not, when you give somebody a telematics discount and you talk to them about that, you're not asking them to do something really, right? You're giving them money in their pocket. And again, if you can think of it that way, those feelings will come through to the people that you're talking to. Remember that also, by the way, and we'll probably talk about this in a later webinar too, customers who are too quick to want to cut coverage, but you're not taking advantage of these discounts, are unfortunately the most likely to sue you if there's a problem. The customer who says, I just want state minimums when you're, offering higher limits and so forth, because they just have to save that money. And by the way, we know it's tough times right now for a lot of folks, and that's difficult. Do you think when they're being sued by somebody and they said, I had 100,000 before and I came to you and you gave me 25,000, that do you think they're not going to sue you? If they needed to save, $40, per policy period on that, because the money's so tight, they're absolutely going to sue you and say, my agent cut my coverage and didn't explain to me how important it was, which will cost you at least your deductible on your E&O, if not more, also the time and the anguish of that kind of a thing. So the things we tried to talk about today are about how to be competitive, using without having to reduce coverage, and using all the tools that you have. And I guess I'd go back to what we said earlier as well, especially those discounts that TJ was listing that everybody can qualify for. Our invitation is, try that for a month and use, do the advanced quote discount, do the telematics, do the auto pay, do the paperless, put it all on there, and then explain to people as you go through the quote, okay, here's the things you're going to do so that you can get that rate. We'd love to hear about your experiences with that. We see that agents who do it, they're writing more business. And of course they are, because they're giving their customers the best rate that they can. And it is interesting how a lot of the times there are things you think, I don't necessarily want or need that, even a discount. But once you see the value in it, you're like, I do want that after all. So anyway, I want to give a big thanks to TJ for his preparation for this stuff today. Happy selling, good luck, and we'd love to hear about your experiences with it.